Hi, my name is Joe Park. I'm CEO of Horizon Stewardship. Welcome to the Q&A session of our webinar, How to Complete Your PPP Forgiveness Application. This is the Q&A that came after the webinar, which you will find in a separate recording in Giving 365. Our guest today is Stan Rives. Stan is a CPA and partner at Cape and Crown accounting firm. He's also an ordained clergy who lives out his calling by helping churches and nonprofits more effectively steward the resources that God has entrusted them with. Stan, let's get right to the questions. Mark White asks this question. A bill is currently pending in the Senate, Senate Bill 4117, that is meant to specifically give automatic forgiveness to anyone with a PPP loan under $150,000. Stan, in your opinion, what are the odds that it will pass? And more specifically, will it pass in a time that is useful to us?
No, that's a great question. We're aware of that legislation. It's not getting a lot of mention, if you will. So I don't know what that means. So there's not appear to be a lot of political or public pressure on that. Certainly there's a lot more in the news about the next stimulus coming out and the amounts for that. We would be hopeful that this would come out, for these loan amounts. Many times these are indeed many of the churches that we're talking to right now. It could be these small business owners who, quite frankly, don't have a lot of the resources otherwise. And on the government side, it takes just about as much time to audit and monitor all these loans as it does the big $2 million, $4 million loans. And so a lot of the public pressure has been on the larger loans. So we know there will be a lot of pressure there. We'll see just on the overload on the SBA if there will be a legislation coming, but I honestly don't know. It would be a 50-50, it's a flip of the coin if it happens or not at this point.
All right, so I think we've answered the next question. Jeff Gardner asked, does it make sense to submit more expenses than you need for the loan in case they don't accept certain forgiveness areas?
Absolutely, yeah, we would certainly encourage, since there's an extended period, certainly throw in an extra month of expenses from payroll to your operating costs of mortgage, utilities otherwise.
So Edna asked, can we use all the loan money for only payroll and benefits and not for utilities or other expenses?
Absolutely, great question, Edna. There's a threshold. You have to spend at least 60% now, but there is no cap. You can spend 100% on payroll.
Linda asked this question. My loan was funded on 4/16. We had a payroll run on 4/22, which covered wages and earnings from 4/1 through 4/15. Can I include this payroll in my forgiveness calculation?
So great question, Linda. My recommendation professionally would be to not include that one because you have plenty of time on the backside. So I would start with the next payroll and continue rolling forward for as many payrolls as you need. There's a good chance that that one could be disqualified. It may not be, but as we interpret the information from a conservative perspective, we would not include that one.
All right. Got another question from Mark. We had someone voluntarily quit in late February. I know this will not affect us from an FTE standpoint as there's a safe harbor for voluntary resignations. However, the salary reduction worksheet seems to indicate that we will be penalized because their salary appeared to have been reduced. Am I missing something? Should they be included in the salary and hourly wage reduction calculation?
So they would need to be included, but then the safe harbor, there would be the justification that they voluntarily resigned and that position is vacant and it's either being filled or has been filled. But that's part of that safe harbor documentation that there was a voluntary reduction there.
Okay. So Carol asked this question. Is payroll calculated for the entire 24-week period or only for the weeks until the PPP funds are expended?
So if there's salary reductions that have taken place of greater than 25%, or if when you're doing your FTE calculations, you would run those calculations based on the covered period that you're using. But then whatever those differences are will be attributed to the full 24-week period. And so that's what makes it a much greater financial challenge.
So I think we've answered this question. Word came out over the weekend that Mnuchin is recommending loan forgiveness for under $150,000. I think you spoke to that one earlier. Any additional comments on that, Stan?
We're hopeful it'll happen, but there's no guarantee. This is certainly a very interesting year with a lot of activity taking place. We'll have to wait and see. That may be a good reason to wait on the process to see if you're automatically forgiven if you have a loan less than 150. Certainly you want to consider that.
So Pamela asked this question. We want to use the 8-week period instead of the 24-week period. The 8-week period ended on June 28th. Is there a deadline for filing forgiveness application for the 8-week period?
There's 10 months, I believe, that's available.
So Crystal asked this question. This is back to the easy form. We've got a lot of questions about using the easy form, and I want to remind folks that we'll get an opinion on that and post that with the documentation. Mark asked this question. If we had to worship online and stop our preschool program, does that qualify as an FTE safe harbor? Number one says we were unable to operate at the same level of business activity. Not sure what business activity refers to here. Will we have to show that giving declined or something? Also, why is governmental guidance not included in the list of agencies along with the CDC, OSHA, and Health and Human Services? So that's a long question. I'm going to break it back down for you again. Because we had to go to online worship and stop our preschool program, is that a FTE safe harbor?
Yes, it is. The fact that you had to reduce or eliminate your preschool activities was a governmental agency decision.
All right. The next question is has to do with the business activity. When they talk about business activity, can you define that?
Well, certainly in a church setting, we're talking about your ability to conduct worship and all the church ministries that you would normally have. As those are being impacted, that would be the business impact of the church's ministries. I don't know if that answers the question better or not, but.
So Aaron is asking this question, man after my own heart. We didn't, maybe a woman, didn't change our employee count or anyone's rate of pay. Is there a way we can just certify and not fill out so much paperwork?
No, you still have supplying documentation of 941s, payroll registers, bank statements, and demonstrate that all those employees were kept on and paid. But it does make your calculations far more easy. That's the good news.
So Laura asked this question. I saw stated that borrowers that experience reductions in business activities as a result of health directives related to COVID and did not reduce salaries or wages on their employees more than 25% are eligible for the easy application. I see that's another easy application question. Again, we're going to get a ruling from Ted, who's both an attorney and a CPA, the author of the paper that this is coming from, and post that up along with the easy forms. Priscilla asks this, is it incurred and paid or incurred and paid?
So again, that has been addressed in prior webinars, and it almost becomes moot in the fact that we've got an extended period now, that we don't have to compress it into the 8 weeks. But the idea is that the expense was incurred, that the time frame. So again, being very, very specific, if an employee was scheduled to work on a Monday, and whether they worked or not, but that was incurred because they were scheduled to, even if they couldn't, and they were, they were being paid even though they weren't working. That's the incurred portion. Paid is that they actually received the paycheck. So it's got to happen within the pay period or within the covered period. So referencing even some of the earlier examples and some of the examples we've mentioned today already, as well as the white paper, the incurred and paid, really, because we have the extended period on the back side, make sure you start on a clean payroll cycle on the front side. So you want to avoid putting something in that may be marginal and be discounted or disallowed later, reducing your loan forgiveness eligibility. So be conservative, start in the pay period that's clearly indicated within the time frame after you received your PPP loan, and then extend it into the future with sufficient time to have enough payroll expense.
All right. Mary asked this question. After 8 weeks, I do not have enough funds left over for another payroll, but I just bounced off my screen here for a second. Here we go. After 8 weeks, I do not have enough funds left for another payroll, but more than I need for allowable expense. Can I use the 8-week period for FTE calculations and the 24 period for other expenses?
I'm trying to make sure I understand the question. So what she's saying is there's not enough money left in the loan proceeds to account for a full payroll. So can she use it for operations? She can use either. So the fact that, I'll make up a number. If you receive $50,000 in the PPP loan, and you've been tracking it, and you've got 40,000 of it spent, you got 10,000 left, and your next payroll is 15,000. You can use it for the next payroll, and and now you've overspent the 50 plus your operating costs of mortgage, rent, or utilities. And so now you've got, let's call it to 60, 75,000 of legitimate expenses against the 50. That makes it much easier than to, you're demonstrating you've overspent.
So Pam asked this question. How can we get relief for people who are occasional employees, like a single day camp counselor, nursery workers, or substitute teachers who work during the January and February period, but who were not needed in the cover period?
So again, there's provisions for the seasonal employees that's already allowed for in some of these safe harbor. But again, because of the extended period that we have now, 24 weeks, my guess, if it's just a few employees that are working occasionally in January, February, adding an extra payroll run during that sequential period will more than offset those amounts when you start looking at the calculations and doing the getting ready for the application.
Bobby asked this question. Must we include employees in the FTE calculations who may have worked a very few? Must we include employees in the FTE calculations who may have worked a very few, less than 1% of our total hours in the 2019 and 2020 calculations? Do you understand the question, Stan?
I'll attempt to. So the question has to do with, they had a few employees working just a few hours in 2019. Do you have to include them in the calculations for the loan forgiveness? Again, if you'll recall in the presentation, there's 5 different periods that get analyzed, and you pick the one that is most favorable to you as a church. So there will be some options where they can be excluded, potentially based on when they're working, versus some of the ones that they will be included. And so that's where you get the variety of responses and the ratios that you will use to determine any loan forgiveness reduction that may or may not occur. And so you'll look by running those analytics, if you will, by the 5 different periods, you'll be able to determine which one has the least amount of impact.
So Joni asked this question: how do we calculate the weekly salary when a pastor is paid monthly?
So the best way to do is take the monthly rate times 12, divide by 52. And that will give you the weekly rate.
So Mark asked this question: we have an associate pastor who was reassigned to another church and will not be replaced. Since this was during our cover period, is there a safe harbor that will apply, or will we be penalized for this FTE reduction?
So several things can play out. Again, depending on, I don't have enough context. So when you say a different, assigned to a different church, is it a sister church? Is it totally independent within a denominational structure?
I think what we're talking about is maybe a Methodist pastor who was assigned to a different church. Is that considered a voluntary resignation? How does that classify?
So I'm not sure how it's classified within the denominational structure, if it was voluntary or not, but from the SBA side, that would certainly, that can be mitigated. The calculation would play out that position is gone. But then you could apply for some of the safe harbor rules saying that, from the denomination perspective, they were reassigned. That becomes a safe harbor because that person's still employed elsewhere. But then again, you can offset that by including, again, an extra payroll run. That would more than offset that differential depending on when that transfer happened. That's either at the beginning of the covered period or at the end of the covered period. May or may not have an effect. But again, when we start looking at the number of full-time equivalents, if that number drops, that can have an impact on the full 24-week period. So that's some of the calculations you want to mitigate and look for. So if you can offset it from a safe harbor, absolutely. Otherwise, you may want to consider extending that time frame for the full 24-week period because there's no penalty not to, or offset it with some other expenses within payroll that will offset that FTE reduction should you not be eligible otherwise.
So David asked this question: if we opt for a 24-week period, can we choose any end date for our covered period as long as the entire period falls after the receipt of our loan?
So if I recall correctly, and it'll be in the white paper as well, it cannot exceed 12/31, 2020 would be the end of that period. So it has to be before that time frame. It can't go into 2021.
But any date prior to that, they can
Correct.
end their application.
Correct.
So I think the next question was the same as that one. Here's one from Financial Secretary. If you have a biweekly payroll, do you need to break it down to a weekly payroll for the FTE, or can you just divide the total hours for the biweekly payroll by 80?
Great question. I'm trying to think between the FTE versus the salary computations. The SBA application has moved pretty much everything to weekly calculations. So I would be prepared to move everything towards a weekly calculation. Again, the fact that you're biweekly does make it much easier, but the application process and the documentation that we're seeing right now really leans towards everything being a weekly calculation for consistency across all applications.
So Helen asked this question: do you feel it's appropriate to use the FTE reduction safe harbor for a preschool if the governor has ordered the close of the schools in our state?
Absolutely, because again, that's consistent with one of the government agencies. And again, I think one of the questions was, we didn't list all the government agencies, and that's correct, because certainly if the president, the governor, or any other executive branch, if you will, issues of an order or a mandate, those always apply. But then certainly CDC and some of the other healthcare don't always get the same notice because they don't always have the same regulatory authority. But the government will rely on these agencies otherwise. So certainly if the governor has said daycares have to remain closed, then that becomes a safe harbor against your FTE calculations. And
We're going
you
to
want to
wrap up
document that. I'm sorry, I was going to say, part of the documentation would be that you're in this state and the governor made this issue on this, this pronouncement on this date. That's part of the clarification to make it easy to determine which states had which activities on which dates.
So we're going to wrap up the Q&A in about 5 minutes. We still got 116 questions out there. We can never get to those. And we're wearing stand down because these are some really technical questions that are being asked. What I would encourage you to do is to look at the Q&As that are still there. If your question has been asked by somebody else, upvote that so it will rise to the top. So Oliver asked this question: the PPP Schedule A does not appear to allow for capturing any housing allowance.
Well, you would probably, yeah, and I'll need to think through exactly, go back and look at that and spend some time with Ted on that. There are ways, because it is, I'm not sure where it gets captured in Schedule C is bottom line what I'm saying. But it is an allowable expense, so it may be that it's just added into the total compensation versus segregating compensation and housing allowance. It's probably, the instructions are to combine the two for this purpose. Because if you think about it, it's total compensation that we're looking at.
So John asked this question: if an employee's hourly rates are not reduced, but their hours are, how does that impact the forgiveness reduction?
Great question. So the salary reduction portion is not impacted because their rate of pay was not reduced, but it will show up on the FTE reduction as a reduction in the FTE equivalents. And again, that can be offset on the average over the covered period of, for how many weeks were those hours reduced, and then what's the net effect over the entire period against all the employees. And so then you end up looking at what the net effect of what all the total number of FTE equivalents in your organization was at the beginning of the period versus at the end of your period. And again, I feel like I'm beating a dead horse, but that becomes the biggest challenge, is if that number is significantly reduced at the end of the covered period, that will create a reduction factor that is applied for the full 24 weeks, which then makes the amount of ineligibility for forgiveness a much greater amount because it's being multiplied by 24. And so, you think about it, even if it's only $500 times 24 becomes a much bigger number than just $500. So you want to look at that and make sure you're looking at the safe harbor rules. You want to look at making sure you're adding additional expenses to offset any of those reductions.
So last question here. We provide our pastor Social Security Medicare allowance as part of our compensation. Should that be included in her payroll costs or just base salary and housing?
So if it's done correctly, the additional compensation to clergy to offset their self-employment tax, if you will, the employer portion otherwise of Social Security and Medicare, is actually treated as compensation. I'm not sure how that particular church or person asking the question is treating it, but the proper treatment is, if you're providing that offset, it is taxable compensation to that clergy, and it will already automatically be included in compensation. If it's done in any other format, I would have to look at that on how to correct it, then get back to that compensation question, i.e. if it's a stipend otherwise or some other irregular treatment, that would have to be corrected first.
Well, Stan, I want to thank you so much for you participating today. I want to remind all of our viewers that you can find COVID-19 resources in giving365.com and horizons.net. You will receive a link tomorrow that will allow you to download all of what we are discussing. If we don't have that ruling from TAD about the use of the easy form in time for to post it when we send that out, we'll actually just email that directly to you when it's ready as a registered viewer of this webinar. Stan, as always, I appreciate the effort you make, how you serve the church as a clergy member doing this work. Anything you want to share before we wrap it up today?
Again, I'm just delighted to partner with you, Joe, and Horizon Stewardship and serving churches. Really is a calling for us. We're delighted to be able to do this together. And thank you to all the listeners and participants for great questions, for joining us week after week to talk about these items, and certainly looking forward to the weeks ahead as we get into our fall seasons and seeing what church looks like this fall, and trying to be prepared financially for that as well. So again, if there's anything we can do to serve you, our number one goal is provide you the information, the content to be able to fill out these applications, get the loan forgiveness. However, if you're feeling overwhelmed with all the details and the calculations and you want some help, we're prepared to just help do what we call a top level review, or we can, as you've mentioned, we can literally sit down and help you fill out the forms, fill out the schedules, make sure they're right. We've got a variety of templates that we're using, working with churches in particular, to serve them well, so that you can go about the business of that you do at your church day in and day out without this anomaly that we're dealing with separately. So thanks again for the opportunity to be a part of this, Joe.
Thank you, everyone. Have a blessed day.